interest rates and how they affect property. And we just had the budget speech, so we're going to talk a little bit about finance today, but we're not going to go into heavy detail or anything. We're just going to talk about finance today. Hey, if you haven't watched this channel before, it's GillT. It's Coffee with Rob. Let's have some coffee. It's all about Cape Town, it's all about fun, and it's all about property, of course. Let's get to it, guys. Let's talk about interest rates and finance. Yeah, so the budget speech has just gone down, and how's that affected us, and how does it affect property in general? The big thing here, guys, is how do interest rates affect property as well? Okay, so we'll get to that. We'll get to that in a moment. What's important is the ceilings on income tax have been raised now. So that will also affect property because that puts more money in certain people's pockets and it makes it easier for them to purchase, so they got more disposable income. On top of which we now have a situation where they've increased taxes, sin taxes, which means alcohol is going to cost 8% more, cigarettes are going to cost 8% more, so that's going to take away from that again, so some disposable income has been removed. Transfer duty taxes have remained the same, so that's not going to affect us much. And there's a ceiling on transfer taxes, you know that, eh? So over $1 million, well, if you purchase under $1 million, you don't have to pay any transfer to the taxman. But over and above that, it sequentially goes up. That hasn't changed. That stays the same. VAT remains the same. There are some fuel levies coming into play, so that's going to take away some disposable income as well. But interest rates have remained the same. Now, interest rates in South Africa are the lowest they've been since I think 1973 or something like that. The repo rate is down at 3.5%. Now, if you don't know what the repo rate is the lending rate that the banks pay to the Reserve Bank for borrowing money from the Reserve Bank to lend to you. Okay, and they make a profit on that. The average at the moment, I think they're lending at about 7%. I know it could be 10%, but a lot of, the 7% is the general rate. So some banks are now giving bonds at 5.9, 5.5, averaging around under 7, around 6%. I've heard of one going for 4.9, which is quite crazy. It's quite good. So it depends who you are, I suppose, and what you can get. But now, how does this affect the property market? It affects it in such a way that everyone in the market or looking to purchase now has more disposable income, or anyone who was looking to sell a property also has more disposable income, and they don't want to sell because they'd rather keep what they've got because it's affordable, it's fine. Rental market is affected in a negative aspect, because why would you go and rent a property if you can afford to purchase a property? So those that are going to rent a property probably can't get a bond, can't achieve a bond. There might be more issues with rentals, with people paying their rentals and that sort of thing. People might be having more difficulty. And then there are those that are renting that just feel that they don't want to own a property, they don't want to have the hassle, and they're just going to rent property. So there's loads of those types of people out there still as well. But people don't want to sell their properties or at the moment because there's no need to. And there's been a lot of fear with the virus last year and that sort of thing, so people are thinking, let me hold what I've got and just stay where I am. Those that are going overseas, leaving for overseas and doing that type of thing, those are where a lot of your sales are coming from at the moment. So let's have a look at this. The lower the interest rates go, the more people want to purchase a home because your bond repayments are so low. And the thing is with renting, renting is going to cost you a figure no matter what, okay? And all the landlords, what they were achieving last year, will try and achieve the same this year. And you'll be able to go and purchase and get a loan and pay less than what they're asking, so you're not going to effectively rent the property. But when you purchase a property, remember you've got overheads, you've got rates and taxes that you've got to pay, in some cases levies, and you've got maintenance costs, and all those types of things that you've got to factor in as well. So don't forget those costs as well, because they do stand. But that said, over time, you're going to be paying a lot less than the person who's renting, because your bond repayment will remain the same for the whole 20-year period if you've got a 20-year. So you're actually advantageous, because inflation will move up and your payment will remain over here. So in 20 years' time, it's going to be like paying 200 Rand a month now, you know what I mean? So it becomes legible as worthless or whatever. A lot of people like to pay their bonds off quickly, but if you start looking at finances and you start working it out and all the rest of it, sometimes it's not even viable to do that. Because the other thing is it viable to hold cash in an environment where interest rates are so low? Probably not. It's probably better to invest in something, whether it be in property, the stock market, whatever the case, where you can get some kind of return. So interest rates will affect the market adversely, because if the interest rates are high, then obviously you're going to go put your money in the bank, make some interest back, or go and invest in some kind of stock that's going to give you your money back quickly, whatever the case. It's cheaper to rent than to buy because you're paying so much on the loan. It's expensive to loan money, so you'd rather buy things cash. But when money's cheap, and usually it is, it's cheaper to loan the money and own the product, and you're paying less back. Okay? If money's cheap, it's worth it to use somebody else's money. Let's be honest. Why not? So interest rates, that's how they will affect the market. So what they do is they bring an influx of people that want to purchase property. There'll be a lot more people wanting to purchase property. And we're going to start to swing the market. And there won't be a lot to sell. So that's how it's going. That's where we're going with the market. Hope that gives you a little bit of insight. But we had the budget speech, and the budget speech has kind of said that your disposable income will increase if you're paying less tax now. You will pay more for your booze and cigarettes, and you will pay more for your fuel. I hope that helps you. Thanks for watching, guys. It's Rob GillT. Till next guy. Cheers.